the equity markets here in India. And well, I'm sure that a lot of you have questions about stocks that you're holding or stocks that you're considering buying. We're just waiting on for a few seconds while we get online on all of our social media platforms. But I want to start by asking, there are a lot of people asking about Tata Motors, Gaurang, and I want to start with you on this one. We've seen a bit of a jolt in the Q1 earnings, but the underlying in terms of the demand seems to be intact. Even the company is saying that it has retail orders, significant number of retail orders. Do you see that all of this will come back in a big way and you could see a very big Q4, and investors should bear that in mind before selling right now?
Well, Alex, the perception of an investor has to be in terms of investment time horizon. Now, if you bought Tata Motors purely from a short to medium term point of view, naturally you have things to worry about. But if you're a long-term investor, then as a brokerage house, Geojit has been positive on Tata Motors, and we've discussed this stock even earlier on this show, if I'm not mistaken. The problem is that the shortage of semiconductor stroke chip is not an issue only with Tata Motors. All high-end luxury international automobile manufacturing companies have issue with this, and it is the similar fate that all of them follow, which Tata Motors has been suffering as far as their JLR business is concerned. And as we all know, Alex, JLR is the high-end premium segment business for Tata Motors, and it translates into high-end margins as well. For domestic business, well, there is no issue, is what I understand, and I stand to be corrected if I'm wrong. Couple of their vehicles in the compact SUV segment has been doing extremely well, and their recent foray into the EV segment has seen tremendous appreciation and order booking by the customers for Nexon EV or Nexon fossil fuel driven vehicle, be it Hexa, be it Harrier, be it the new Avatar Safari. And along with this, Alex, I think as a brokerage house, we are extremely positive on Tata Motors, because I think come 1st April 2022, you will have the scrappage policy, and wherein you will have commercial vehicle manufacturing companies in the spotlight because of the demand going up, and along with that, capex coming through. So, well, it was an untouchable stock some time back, has become favorite for the last 6-8 months. Now it is again in the news for semiconductor issue, and there has been a little bit of overhang. But I don't think if you're a long-term investor, these are levels that you should sell off. In fact, I would go to the extent to say that if you bought it at 300 plus levels, then 280, 285 where the stock is trading, I think it's a tremendous opportunity to add to the stock. We're maintaining our target somewhere close to about 365 to 380. And if the coming quarters, the issue of semiconductor stroke chip gets resolved to a certain extent, then definitely, depending upon the earnings, the target would get revised.
All right, gentlemen, let's kick off the let's kick off the query segment then. We've got quite a few coming in. The first one is for you, Kunal. Sumit Kumar Dash is asking about Prince Pipes, which he has bought at levels of 400. It's given him handsome returns, but it's been correcting sharply in the recent past. He's wondering whether to add more at this point or wait for further corrections. What do you have to say with regard to what's happening on the charts?
Yes, the stock has done pretty well for itself, and I think the stock in the recent past, just over the last 3-4 days, has just shown signs of mild weakness. Now, if you're looking for a better entry point, I would suggest that wait for maybe one more round of correction. So either you can trim out some profits over here and then wait for better levels on the downside to try and buy back. Or if you're looking to average, and assuming if you're looking to hold on to it from a longer term view specifically, then I would suggest closer to a level of 600 or 585 to be precise should be a better level for you to enter the stock. I believe that the indicators are just about to enter into the oversold territory, and typically just prior to that we see at least an 8 to 10% correction. So I would suggest a better entry point for Prince Pipes if you're looking to average should be around 585 to 600 range.
Okay, Tanla Platforms, Kunal, coming back to you on this one, 35% gains for the year so far. would you say that if you've bought at levels of, I think the level that Nayan has provided is wrong, but what would you suggest with regard to the charts right now?
So, I think the stock has done reasonably well last year. If I'm not wrong, it rose up from, I think, 50 rupees or 60 rupees odd to a stock which jumped up almost, 12 times to 13 times, post that as well. So, it's done reasonably well for itself for the last 1.5 odd year. Now, I think the stock is going through a consolidation. Now, typically what happens is when you see a stock rising up 10x, 12x in a very short span of time, you see a multi-month, multi-year consolidation as well. So if you're ready to hold on to the stock for say the next couple of months or next couple of quarters at least, and let the stock consolidate, then I believe it could be a good opportunity to hold on. If you're looking to add or average, then I would sense closer to 775, 780 seems to be a good support level for the stock. So if you happen to see the stock closer to those kind of levels, that could be a good averaging opportunity or an entry point, of course, depending on your cost price.
So I was under the impression, Kunal, that the buy price was wrong, but Nayan has actually gotten at levels of 76. Kudos to him for holding on through that rally. Coming to you, Gaurang, on this next one, I think you've already given your view on the pharma space in the first segment, but viewers may have missed that. Shruti is asking about Biocon. Should she buy in?
Well, so I did refer to three names as somewhat underperformers: Sun Pharma, Biocon, and Dr. Reddy's. And Biocon happens to be one of the investment ideas from a long-term point of view. And my sense is that between 360 and 380, there is tremendous amount of comfort zone in terms of opportunity for long-term investors to get in. There are again news flows which are an overhang, but they are all short to medium term. Long term, I think I wouldn't be surprised to see Biocon at about 465 plus level. So if you have it, hold on to it. If you don't have it, I think you can buy on dips.
Okay, let's talk about Kotak Mahindra Bank. I'm coming to you on this one, Kunal. Sagar says that he's looking for a technical view on the stock. He says that he's looking at a possible breakdown incoming in the counter. He's looking at the options data, and to him, the chart does not look very encouraging. Do you concur with that assessment?
Has shown signs of weakness, Alex. So I agree to that point that the stock has shown signs of weakness, both on the price front, on an absolute basis, as well as on a relative basis. So what was happening is since the last, I think 2-3 months, the markets was getting a bit more segregated, where you had the likes of ICICI Bank and SBI from the banking space, which did exceptionally well. But on the other hand, I think HDFC Bank and Kotak Bank were the two names which managed to lose out on their way somewhat, and these stocks have gone through in a drag kind of a mode. So maybe a couple of weeks, couple of months of more sideways price action could be seen into these names. But remember that these are very strong quality stocks. There is a phase where these stocks tend to underperform, and then once the catch up begins into these names, the catch up happens to be very, very quick and swift into these stocks. So yes, short term chart patterns could indicate some bit of weakness. But if these stocks happen to come back and break back above their key resistance zone, I think weakness should get converted into strength, and you might see a much more stronger recovery coming into these names.
Okay, relatively short answer, Gaurang. I know there are so many stocks that you can suggest, but Sanjeet is looking for a couple of stocks that he can put money into an SIP mode over 3 to 5 years. So perhaps restrict yourself to 2 or 3.
So that will be HDFC AMC, Reliance Industries, and possibly if I have to look at a mid-cap pharma, mid-cap IT, I beg your pardon, then Persistent System it would be.
Okay, and those are all great names. I'm coming back to you, Gaurang, on this next one. Anuradha has got 9 shares of Ultratech Cement, which he bought at 4,500. She's asking if it's a good long-term investment. And should she add this on an SIP basis?
Well, if she bought it at 4,000 odd, I think it is a pretty, long-term investment. Long time back, I beg your pardon, she must have bought it. The stock is trading at about 7,000 plus. Correct me if I'm wrong, Alex. 7,500 is where the stock is trading at. Cement sector overall continues to do well, and our view on cement sector is extremely positive, and Ultratech happens to be one of the top pick amongst the cement universe. I think she should have done this long time back. If she missed the boat or missed the bus, then it's time that she should start doing an SIP in Ultratech.
Okay, let me go across to you now, Kunal. We've got Padma, who's got 300 shares of Bombay Dyeing and 200 of Indocount. Should she switch to other textile names like Wellspun and AB Fashion, or should she switch out entirely into a sector like an IT?
You can stick around with the same sector. I don't see any major reason of selling off of your holdings over there. Now it all depends on where your entry price has been. If it's been substantially lower and you're sitting on good amount of profits, then I would suggest to continue to hold on. These stocks have shown just the last 1 month of strong recovery and price trends, and that's been more of a cohesive price action. So right from Arvind Mills towards Bombay Dyeing and so many of the other stocks, Raymond, etc. They've managed to recover quite strongly over the last 1.5 odd months. And now, based on the market circumstances and the scenario as well, even these stocks are going through a corrective phase. So I believe that both these stocks, Bombay Dyeing and Indocount, look attractive to me on the charts. And if you are ready to hold on to it, I would suggest to continue to hold on. In fact, Raymond is also one of the stocks which has been looking very attractive on the charts, and it's just recently shown signs of some breakouts about those 400 levels. So if you want to add, I think I would suggest even Raymond in that kind of category.
Okay, we've got Sudeep who's asking a question. Gaurang, I'm hoping that you have some advice that you can provide here. Khadim India, he's gotten an allocation in the IPO and he's lost ground, so he's lost a significant amount of capital. He's wondering whether he should sell at loss or should he average at this point and hold for 1 to 2 years?
First of all, my advice to your viewers and investors is that don't let your capital erode to that extent wherein the recovery of your capital itself becomes a big question mark. If you take appropriate steps with the risk alarm getting triggered off, I think there is possibility of not only recovering your capital but also making profit on it. Now, Khadim India has been an underperformer, and in the footwear universe, I think if there is one stock that you should put your money in, and that's going to be Bata India. As a disclosure, we do have positive coverage. So, if I would be in his place, I would possibly bite the bullet and move on to Bata India from a long-term point of view.
Okay, I would actually encourage you to ask the question. Don't just tell us which stock you've bought, like Manoj, you've done. You said that you purchased HDFC Bank 200 shares at 1470, and that's, well, it's good to buy HDFC Bank, but you've got to tell us what your time horizon is as well. But Kunal, I'm coming to you on the charts. What do you see for HDFC Bank?
There's a definite amount of weakness for HDFC Bank. As I explained earlier, Alex, that the two banking names which have underperformed over the recent past have been HDFC Bank and Kotak Bank, predominantly on the large cap private sector bank space. Now, on the charts, the stock has confirmed a breakdown below its 200-day moving averages. But there's also a very peculiar kind of a behavior for the stock, where long-term rallies into the stocks, they get corrected. They tend to get corrected and reversed closer to this 200-day moving averages. So I would sense that a process of mean reversion has happened for HDFC Bank. The stock is now available below its 200-day moving averages. So near-term weakness, yes, the stock could probably remain into more of a drag mode. But if you are in from a longer-term haul, then I believe that these could be good levels where you can start nibbling in yet again on HDFC Bank. I believe that once the stock returns back to its quality trend, it could probably potentially break out of its major swing highs in the medium to long term. So would suggest a buy on HDFC Bank on dips at current levels.
Okay, I think a number of people are asking about Reliance Industries, Gaurang, and people have at least a 1 year view. They've bought in at levels of 2,150. In fact, you have one viewer, Balakrishnan, who's gotten at levels of 1,800 and says that he can hold for the next 5 years. He's asking whether it can give a return on investment of 10% plus on a CAGR basis for 5 years. Is that a potential return that one can look forward to?
So nowadays, a lot of people have started looking at market as in it is a QSR kind of a service, quick service restaurant, wherein People want exponential return in a very short period of time. It's good to hear that there are investors who expect 10% return, over a period of time. The numbers gone by were in line. Our sense at Geojit is that the new age business, geo digital retail, even if I have to take into consideration oil to chemicals, I think it's going to do extremely well. This is also a stock which I just recommended a while back for an SIP. 2650 is the target, Alex, depending upon the last numbers that we've seen. And I think if all these verticals get fired up, and if there is a slight bit of improvement with the refining margins, then I guess to reach 2650, it's not going to be very difficult for Reliance.
Okay, Santi's got a question, and this is for you, Kunal. RPG Life Sciences is the counter. Bought 100 shares at levels of 463. Current market price, if I'm not mistaken, is about 485 or thereabouts. In fact, if we can pull up the chart, that'll be good. He's asking about the range over the last couple of months. He says that it's been in a range of 430 to 485, and he's wondering about the intraday highs today. It's been significantly above that. He's asking for your views and your targets in the near term.
Yes, the stock has been in a range, Alex, and I think if I'm not wrong, yesterday the stock had given a breakout of this range, crossing about that 500 level. Today the opening was quite strong for the stock. Saw the volumes also picking up, the price hitting, I think if I'm not wrong, 515 mark as well. But somehow with the markets going into a selling spree, this stock as well has been succumbed towards some selling pressure. So typically what happens is when you see a breakout and the breakout gets reversed subsequently in the next 1 or 2 days, then you see the stock coming back into this consolidation band. So my sense is that the stock would get back into this consolidation. So if it manages to hold on to those support points of 455, 465, then it could continue to consolidate for some more time. But yesterday's breakout was something which was very interesting. So the near-term trend looks to be more of consolidation, but I would suggest that if you can hold on to it for another couple of weeks and the stock holds on to the support level, then you could see a potential breakout yet again for RPG Life.
Okay. Gaurang, about 6 months back, there were some pitches being made for ONGC as a hedge against rising crude prices. And that's an interesting view to have, but I don't think it's really smart from the perspective of the retail investor. That's my personal view. We've got Shrikant, who's bought ONGC at levels of 128, wondering whether to book losses and move out to something else.
So Alex, on the fundamental, we remain positive, but the problem with exploration companies, especially which are government owned, there are a lot of hurdles. Though I do respect the government's NELP policy inviting private players, because exploration of gas and crude oil, onshore and deep waters is justified, but ultra difficult terrain and ultra deep waters, you need private players to come in. And up until now, the NELP policy was not all that attractive enough for private players to come in. And more so, I think the government has been working on reducing India's dependency in terms of import of crude oil and the oil bill that we have to foot. And these are all at least 1.5 to 2 year kind of stories, or maybe more, depending upon how the entire policy unfolds and how are the private players attracted and what are the options for government-owned companies. So 125, 130 is the target. If you are not in a hurry, stay invested. But I think you should use rallies towards 125, 130 to lighten up and exit the stock.
If you had placed that bet 6 months back, you would have gained about 30%. So, let's talk about JK Tyre. Seema Kumari is asking about whether or not to book profit. She bought Kunal at levels of 115. Stock is currently trading close to 140. What would you say?
Just to hold on, assuming if you are not a short-term trader, then if you're a short-term trader, of course, you can look to book out profits over here. Because if the market gets into a bit of a volatile mode, it's possible that many of these stocks can correct and drop off another 5 to 7% or at least. But if you're in from a longer term haul, then I believe that there's a bigger change in the trend for the stock, for JK Tyre. So something which started off in the month of September or October 2020, there was a big breakout for the stock where it moved up in a single month almost from levels of 600 to 120, 125 odd. From there on, the trajectory of the stock had changed dramatically, and such kind of strong months and strong price performance, they generally tend to alter the stock trends for at least a couple of years, if not more. So purely on the long-term charts, I would expect a bigger up move for JK Tyres. But as I said, it depends on your time horizon and the manner in which you have looked into this investment. If it's a short-term view, you can look to book out profits over here and then probably look to re-enter if the stock gives you the correction of another 5-7% lower.
Okay. Well, I believe, Manohar, your question has been answered on ONGC. We've got Rajan, who's asking about Lupin, and he's gotten at an average of 1,172, and he's asking about duration. I will assume here that he's talking about a short-term duration, Kunal, based on the queries that he's made in the past. What is the ideal duration, if you're talking about the short to medium term, that you would hold on to this?
Depends, from sector to sector. So frankly, for a pharma stock, you can't have a short-term duration of 3, 4, 5 days because it becomes very difficult and rather too over-ambitious to try and expect that pharma stocks would kick off rallies into similar to the high beta stocks. Lupin, for example, has also been a big underperformer as compared to the rest of the large cap pharma front as well. So you look at it over the last 3-5 years, you look at it over the span of the last 12-13 months as well as the span of the last 2-3 months. Lupin has been a bit of an underperformer, but I believe that the stock is nearing to a support level closer to this 1100 mark. So we need to see that how the stock holds on to this 1100 range, and whether the stock holds on to this pivot over the near term or not. If it does, then I believe from a short term view, the time horizon which you can keep could be around at least around 3 to 4 weeks for the stock to try and give you that spate of outperformance and maybe a short term rally as well.
All right, Dikshita, we have in fact spoken at length about pharma companies, and in fact earlier in the program as well on this particular leg, Gaurang has given his views. One of them is Biocon. I'm going to take a question from Seema Sharma, and she's asking about Bhansali Engineering. Coming to you on this one, Gaurang, it seems like it's been a while since we spoke about this counter. She's bought at levels of 188. What should she do?
Well, Alex, unfortunately, we don't cover this one, so I won't be able to answer this.
Fair enough. Kunal, coming to you on this one, stock currently trading at 184, not too far away from her buy price. What would you say she should do?
Well, I think I would advise the viewer to hold on. It still looks very attractive. So even though in the last 2-3 months the stock has gone through a bit of a staggered up move, where it manages to break past about the previous high with slight better volumes, but then the manner in which it approaches towards the breakout is not a clean breakout as such. Now the prior 2-3 months or the end of 2020, the second half of 2020, for example, the stock did exceedingly well, rising up from levels of 40 to 140 in just a matter of, I think, 5-6 months odd. And post that, it's been a bit of a laborious move for the stock, where it's tried to move up from those 140 to 180. So the stock is getting into a bit of a mature phase, where it tries to scale up to new highs or subsequent new highs in a very staggered kind of a manner. I would sense that this could be a good approach, where the stock may continue to move up higher. The all-time resistance or the all-time high for the stock is around 220 mark, if I'm not wrong. So the stock has potential to break past about those lifetime highs. But my only sense is, with this staggered price approach, it may take some bit of more time to try and break past about 220 levels. So if patience and time is not an issue for you, then I would suggest to hold on.
Okay, we're going to slip in one more question. Escorts is the counter, Kunal, and Swayam is asking, he's got at levels of 1,216. He's asking at what level should he buy more?
I would suggest to, in fact, have a stop loss range for the stock, because near-term charts for Escorts shows, signs of reversals or weakness I think the nearest support now for the stock, or the major support now for the stock, is approximately at 1080, 1100 mark. This was the low which the stock had tested in the month of May. So you can look to buy at those 1100 levels, but that would be a very touch and go kind of a zone for the stock, because if it breaks this mark, 1080 to 1100 support, you could be in for a much more sharper drop and sharper correction into this stock. So would suggest to have a bit of a stop loss if it's purely a short term trading stock which you've bought.
All right. I'm sure our viewers will forgive me for having taken less questions today. My partner in crime was missing. But having said that, that's all the time that we have for queries. I do want to go across to you, Gaurang, on your high risk and low risk ideas. What do you have for us?
So high risk is something that we don't advise. Low risk fundamental long-term ideas is what we believe in, Alex. And ICICI Prudential Life, we just saw the numbers. We had a buy on the stock, and post the numbers, we have increased our targets to 740 long-term. Second one is a stellar performance and will add colors to your portfolio, and that is Asian Paints, one of the best companies to invest in the paint sector. Again, recently we saw the numbers, and based on those numbers, we've revised our targets somewhere close to about 3,450. Both are long-term low-risk investment ideas fundamentally.
Okay, Kunal, coming to you on your high risk and low risk ideas.
A couple of high risk trades, and both of them are sell calls, expecting that the markets, if it doesn't sustain the 15,700 mark, we could be in for some short term correction. Two sell calls. The first one from the Pharma pack, sell on Cadila Healthcare. The stock in the last 4-5 days as well has shown signs of correction. It's broken its major swing support around this 590-592 mark. So now keeping that as a stop loss would suggest a sell with a target of 550 on Cadila. And the second is from the auto ancillary pack. It's a sell on Motherson Sumi. Even this stock has shown reversals of trends, broken below its major swing support over the last couple of days. So would suggest a sell with a near-term target of 220, stop loss to be kept at 246 mark.
All right, to all those of you who've joined in and unfortunately didn't get your queries answered, we'll be back tomorrow and we'll take a lot more, hopefully. Thank you so much for your patience. And to you, Kunal and Gaurang, thank you as always for joining in and for being so patient with us and for taking all the queries that you did answer and for the advice that you've given our viewers. On that note, we're slipping into a short break. More on the other side, so do stay tuned.
We all look at the same world, but we all look at it in a different